Hello, everyone. Thank you for joining us, and we're ready to start the Guru's One World Lunch and Learn. So, welcome. And what we're going to see today is how Gurus is going to be able to help you expand your NetSuite knowledge and functionalities. So, let's start and let's take a look here at some One World features. So, today, as part of our team, we have Etienne Bertillon, which is part of our sales team as the business development executive. Also, part from the sales team, we have Ian Tonks, which is our account manager. Myself, also part of the sales team as the pre-sales business solution specialist. My name is Herbert Franco. And from the professional services team, we have Jean-Mathieu Rose as the senior business analyst and our specialist in everything that is going to be related to consolidation, also different One World features. And Jean-Mathieu is the one who is going to be performing our demo today. So let's move forward. For the agenda today, we're going to start with who we are as Gurus, how we're going to be able to help you with One World features and any subsidiary changes. Also, we're going to talk about the advantages of One World. We're going to do the One World demo, and this part is going to be from my colleague, Jean-Mathieu Rose. Also, we're going to talk about NetSuite Uplift and how we're going to be able to help you with any issues in your subsidiary structure. Then we're going to talk about a recap, how Gurus can help you, and we're going to leave the last part for questions. So let's go. This part, who we are, we scale up business with cloud solutions. Gurus has been in the cloud for more than 11 years. We have a lot of knowledge around the subject. We even have a book that was written by our president, Martin McNichol. So just in case you're interested in receiving a copy, just let us know, and then we're going to be able to send one to you, okay? So in regards to NetSuite, we are a 5-star partner. And also we work with Salesforce, which are a silver partner. So we do have solid experience in NetSuite implementations. We have completed more than 800 projects, and we have more than 600 active clients. So let's talk about the advantages of One World. If we're going to divide it in 3 different parts, the first one is going to be global. So we actually want to help you to have a global vision of your finances and your corporation. Of course, it's very important to have one single version of the truth for all of your data. And that includes also the reliability of your financial data, also better use of your IT resources, and you're going to be ready for audit and compliance. On a regional scale, it's very important to say that we'll be scaling the processes across different locations. Also, that we have the same platform for different countries, languages, currencies, regions, and nexus. Also, on the financial side, we're going to be able to have consolidated reporting across business, intercompany transactions, and elimination subsidiary. We're going to get in more details during the demo. Also, we're going to be able to streamline processes for your accounting, and we're going to have an immediate roll-up of financial information from your subsidiaries. So moving to the next slide, here we're going to talk about the One World demo agenda. So what we're going to see in our demo. We're very excited about that. So we're going to start about subsidiary and the subsidiary structure inside of NetSuite. We're going to talk about multi-currency, consolidated reporting and consolidation, intercompany transactions and elimination subsidiary. And we're going to talk about the uplift to One World and subsidiary structure change. So now I'm going to pass it on to my colleague, Jean-Mathieu. Now it's with you. Thank you.
So we'll walk through the different screens here. So we'll look at the subsidiary structure. We'll look at the chart of account really briefly, just to show you the differences when you look at a One World environment. We'll talk about consolidated exchange rate, which is not something you're used to if you have a mid-market edition, because it's really specific to One World, a multi-company environment. And then we'll look at reports. So what key differences we see in terms of consolidating financial from multiple different subsidiaries. So to begin with, let's have a look quickly at the subsidiary structure that we have in this environment. We're going to look specifically at 2 different subsidiaries. So we have Huffman Inc., which is the root parent that you can see right here. So it's in the United States, and the currency is US dollar. So when we consolidate all the financial from the children subsidiary that we see here, we expect to consolidate in the currency of the parent. As you can see, it's not just a two-level structure. We have three-level. So we have here the EMEA subsidiary, which is in GBP. That means that I can also consolidate at that level and will consolidate in GBP. So I can roll up financial from these three different levels. The other subsidiary we're going to look at is Huffman Canada. And this one here is in Canada, and the currency is Canadian dollar. In terms of the different subsidiaries that we have, so a key difference with the mid-market edition is in mid-market, it's a single company environment. So you don't have a concept of a base currency on a per subsidiary basis because there's no such thing as a subsidiary in the mid-market edition. So to have subsidiaries, you need to have one world. One world, multi-company environment, and each company can have a different base currency to present the financial reports. So Huffman Inc., as you can see, uses USD, and Huffman Canada uses Canadian dollars. So this is the base currency that will be used for the different financial statements. When you roll up your financial at the consolidated level, it will use the currency of the subsidiary you roll into. So if I roll up financial at the Huffman Inc. level, I'm looking at the financial from the USD perspective. And what does NetSuite use to calculate how to consolidate those financial? Well, it uses the consolidated exchange rates. So the consolidated exchange rates, in my tab right here, will tell what rate is used for each of the different rate type when rolling up financials. So between two subsidiary, what is the rate that is used and what type of rate? So as you can see, we have current, we have average, and we have historical. So depending on what type of account we're looking at, it's going to use one of those three. I have an example here to show you. So I'm looking here at an account that is configured to be eliminated. So when you run your month-end process, not to overstate your financial, when you do intercompany transaction, you want to eliminate the effect of all intercompany transaction. We're actually going to show you an example shortly of what elimination look like. But to give you an idea, all the accounts here where it says eliminate intercompany transaction can make that transaction a candidate for elimination at month end. We'll also show you the difference in the month end compared to a mid-market, what you should expect to see when you're in a one world environment that is set up to eliminate intercompanies. What you see here, the general rate type. So this is defined on a per account basis. So each of the account has either current, average, or historical. So that brings me back to the consolidated exchange rate table where you can see that you have also current, average, and historical. So it tells the system, well, this is what rate you should be using when you roll up your financials. If I'm going back to the home screen and we go and see financial reports. So what I'm going to do is I'm going to show you the balance sheet and the income statement at the consolidated level and at the local level so you can see the difference between the two. So I'm going to open the balance sheet in a new tab. So on my balance sheet here, you see in the bottom column is total. To really show you the impact of using One World, I'm going to show you a breakdown of the financials. As you can see here, they're consolidated. I'm going to show you the difference between each of the subsidiaries. So as of January 15, this field here, subsidiary context, is really specific to One World because you have multiple different companies. So when you are looking at your financial statement, the subsidiary context tells you, well, through the lenses of which subsidiary am I looking at the financials. In that case here, I could look at Huffman Inc. separately, or I could look at Huffman Inc. at the consolidated level. And looking at the consolidated level means that I'm going to roll up the financials of all the children underneath. It also means that I'm going to have to use the currency of Huffman Inc. So I would not be able to have each sub in each of their own currencies. I have to consolidate everything. So I'm using the consolidated exchange rates to translate all of the postings into consolidated reports. So that means that if I have values, and as you can see here, I have values for Canada, this is not in Canadian dollar. So if I'm looking at the financial from the Canadian standpoint, so the subsidiary context Canada, I would see the numbers in Canadian dollar, which I'm going to show you just after that. But here it's translated in USD. You see this account here, the 1202 intercompany accounts receivable. I have a total value here of 0. The reason why is because I ran the elimination process at the end of the month. So any balance of intercompany transaction are going to get eliminated. So you see there's $12,000 USD here in Huffman Inc. There's $7,855.80 in Huffman Canada. And there is a posting to the elimination subsidiary of roughly $20,000, which brings the balance to 0. So when you look at consolidated reports, you don't see that value. And to see the effect of that, what I'm going to do is I'm going to bring it back to total and refresh, and you're going to see the balance of the 1202 disappear. So you see, we don't see the 1202 account doesn't appear anymore because it's at 0. Now, if I'm looking at the financials, so as I said earlier, each of the subsidiaries have their own base currency, and this is a currency you're using for your financial statements. If I'm looking at Huffman Inc., I will see the numbers in USD because the postings are in USD, and this is the base currency of that subsidiary. If I'm looking at Canada, so Huffman Canada, I'm going to refresh. So the numbers I see for Canada here are in Canadian dollar. So you see the intercompany accounts receivable is 10,000. When we look at consolidated report in USD, it was roughly $7,000 if I recall. So what explains the difference? Well, the difference is now we're looking in Canadian dollar, whereas earlier we're looking in US dollar. So it used the consolidated exchange rate. If I'm going back to the account, so the 1202 under account, so it used the current rate to translate those financials. It's true for your balance sheet, but it's true also for your P&L. So all of your financial statement will have a subsidiary context here. So I can see, because I'm using a CFO role, in that case, the CFO of that demo instance can see the financial of all the subsidiaries, but you can restrict access on a per subsidiary basis. So if you had controllers that are subsidiary specific, so one for the US, one for Canada, one for France, they would see only the financial they are allowed to see. So it doesn't mean that because the system is on one world that everybody can see everything. So it's all rule-based. So you define what's the subsidiary of your employee on the employee record, and on the role that you assign to these employees, you specify what subsidiary they have access to. You can provide access to all of the subsidiary, only the subsidiary they're associated with, or to a specific portion of the subsidiary. If we go back to the example that I showed you earlier, in my tree structure here, I could very well have an employee, on the EMEA here, and give access to the employee to that subsidiary and the 2 children that you see there. You also see in my tree structure that I have more than one elimination subsidiary. Well, it's because for each of the parent that you have, you need to have an elimination subsidiary underneath, because when doing elimination, it eliminates at the closest parent. So this would allow me to have children underneath UK and eliminate intercompany transaction at a level that is not necessarily with the root parent. So it allows to have very, very flexible structure, a very flexible company structure. And as we'll explain a little bit later, it's also possible to change your structure. So it's not something that's set in stone. As your company evolves, you add subsidiary. You may also remove some of them, but you may also expand and split subsidiaries and create additional subsidiary for more coverage. So it's very flexible at that point. It's also possible to change who's the root parent. It's possible that one company buys the other companies. It's possible that you have another system and there's another company that you acquire that you want to add a new subsidiary. So there's multiple different reasons that would push you to add more subsidiary. But so you know, you have the flexibility to do that over time. It's not static. So we look at the example of a balance sheet. Now let's look at an example of the income statement. So we have the income statement open, and I'm looking at the activity of January, where I know I have elimination entries and I've closed already that period. So I know that the elimination has been executed. We can see that I have an intercompany expense at $0. I'm looking at the consolidated level. So I'm gonna look at a breakdown of the financial per subsidiary at the consolidated level. So we'll see what transaction we have. So I have my intercompany expense, and I see that I have a value here for Hoffman Inc. I have a value here for Hoffman Canada, and I've got here the balance that's eliminated. If I click here, I'm gonna be able to see the detail. So I have here my elimination journal entry. Let's just have a look. So this journal entry is the elimination journal entry. When you execute the elimination, you can see what was the source transaction that got eliminated. So there's a column right here with source, and I see that I have a $12,000 intercompany income. So let's look at the source. So this is my source transaction. So this one was an intercompany journal entry, and you see that I have lines that are flagged to be eliminated. So these lines are all candidate for elimination. As I said earlier, the elimination process is at the end of the period. So let's have a look at the month-end closing or the period close in a one world environment. So the key differences with what you would see when you are in the mid-market edition. So if I'm looking at the period close, so I just closed in January 2015. So let's have a look at this. So you see, it's very similar to what you're expecting to see and what you currently see when you're in the mid-market edition. But the key differences are the steps that are related to intercompany management. For example, intercompany adjustment. This is for expenses or time posted for intercompany time, intercompany expenses. Consider exchange rates. So this is one of the last steps that you do, and it's actually the last one before the elimination, because before you eliminate, you need to know, well, how do I translate my financial? Because you need to post a value that eliminates to 0. So since you have consolidation in there, you need to know what rate it is before you can eliminate. So last step before close is to eliminate the intercompany transaction and then to close the period. If I'm looking at the notes, we'll see the 2 elimination entries that were created. So I can open in a new tab. So as you can see, I can track the intercompany elimination. In terms of the period close, it's very similar. Well, actually, it's pretty much the same process, aside from a few steps that you don't have with mid-market, namely the steps that are for intercompany. If we look at a period that's not closed yet, you'll see that you can execute the steps on a per subsidiary basis. So as you can see, so as you can see, I have a task lock all accounting periods. I could lock for specific subsidiaries, or I could mark all and lock everything at the same time. So all the steps that you have can be executed on a per subsidiary basis, or can be executed for all at once. So it gives you that level of flexibility. So we won't go through the month-end closing. We won't take too much time to cover that portion of it. I think we saw the essential components for a one world environment. So that wraps up my portion of the presentation. Thank you.
Thank you, Jean-Mathieu, for the amazing demo. We're very glad here. So what I'd like to do here in this part is to mention that apart from the one world capabilities, what we're going to be able to help you, it's in different activities related also to subsidiary structure change. So I'm going to go through some of those cases, and just in case one of them ring a bell to you, you can contact us, and then we're going to be able to give you more details on how Gurus is going to be able to help you with your NetSuite environment. So let's start one by one. The first one that I'd like to tackle is going to be the uplift to OneWorld. So just in case you're using limited or mid-market edition, we're going to be able actually to bring you to OneWorld. The second case is going to be a merger, just in case you have two or more subsidiaries that will come together. Third case is going to be an acquisition. So just in case you're going to have a new subsidiary because you're acquiring a new company, we're going to be able to help you with that. Also, separation of subsidiaries. Also, relocation in regards to base currency change. So just in case a specific subsidiary is relocating to a different country, we're going to be able to help you with that also. Just in case of restructure, which is our item number 6, and change of ownership, we're going to be able to help you also to configure that inside of NetSuite. Also, we're going to be able to help you layering your reporting structure. So just in case you're going to be able to have a change in your subsidiaries and that will affect your consolidation structure, we're going to be able to help you with that. So the example that we have in here, just as we saw previously here in our demo, if we're going from a 2-tier subsidiary structure to a 3-tier, that will affect your reporting. We're going to be able to help you with that. Also, we're going to be able to help you with D1 royalties. So just in case you're moving from a multi-subsidiary to a single company structure, we're going to be able to help you also with that. And our last example, if you're going to phase out a specific subsidiary. So if it rings a bell for any one of those examples, please feel free to contact Gurus. So this is just a recap here. So let's talk about OneWorld benefits. So the first one, it's going to enable management of multiple subsidiaries, business units, and also legal entities in one platform. Also, we're going to be able to support consistent processes across different countries. Also, we're going to support global compliance of internal and external processes. Also, we're going to provide real-time global business insights for you. For CFOs, one system architecture for audit and compliance. We're going to be able to deliver accounting and consolidation, single view of corporate to subsidiaries, growth and expansion. So here's where we're going to be able to give you a lot of different insights from one single platform. For CIOs, we're going to be able to retire legacy systems and avoid multiple points of integration. So everything it's going to be able to be resided inside of the cloud. And we're going to be able to have an infrastructure that supports growth and scalability. Also, we're going to be able to have security and control of access to different subsidiaries, roles, and users. For CIOs, also, what I would like to add is that we don't need to have a server in each specific location. So everything is going to be managed through the cloud, okay? Saving you time and, of course, saving your resources. So let's go to the next slide. So this is how Gurus can help you. First, we do have deep knowledge in NetSuite. We live and we breathe NetSuite. So we're going to be able to offer you true partnership approach, 11 years of proven process, flexible mode of engagement, collaborative and also workshop methodology, and also ongoing account management. So thank you for attending this demo. Let's go to the next slide. Yes. So once again, thank you for attending this demo. So this is our toll-free number. We have also our email address, our website. So feel free to contact us in case you do have any questions about this demo. And here at Gurus, we scale up your business with cloud solutions. So thank you for attending this lunch and learn. It was a pleasure to have you here. So this is a part to know if you do have any specific questions. We're going to be here online waiting for your specific questions, okay? Thank you and have a great day. Bye-bye.